Good evening, Trey. It is Gorilla Gang back in the house for what seems like the first live stream in 2 months with the silverback himself, CEO Adam Aron. Adam, it's great to have you back again for another conversation and open discussion about the company that we all love here for the Apes.
Ray, it's nice to be with you. I enjoyed our 2 earlier interviews, and I'm glad to be back.
Heck yeah. Well, I'd like to start off by just making a statement for Adam here in terms of what he can and cannot talk about. There are legally binding things that tie CEOs to things that they can and cannot talk about. With that being said, the questions that I formulated was with that in mind for anything that we discuss here today. So I think the most pressing question and important topic we have to start off here with is, for our last interview, there was a Reddit post that got blown up, crazy amount of upvotes of you not wearing pants. For the record, by the way, I want you to know that I was not wearing pants either, and a good fun. I'm wearing my my freaking little running shorts here too. Are you wearing pants today? I think that's an important question.
Well, I actually did not know you were going to ask the question, but yes, I'm fully suited today. I'm not wearing a jacket, but I am wearing pants.
That's money. No naked shorts here here today. Awesome. Well, we're just going to start off here and kind of briefly go over the earnings call because there were some really great things that you talked about. I think anyone that had a chance to listen to that would be pretty pleased with the way that AMC is uptrending here lately. You have $2 billion in liquidity. Your total seats that you're filling on a day-to-day basis, quarter over quarter, is increasing. You've got more seats being sold, less cash burn reduction. It's all great things. But with that being said, I kind of want to know this liquidity piece, right? The $2 billion that you guys are sitting on. So you spoke about potentially up to 10 movie theaters that you'd be able to acquire and, increase revenues. But outside of that, what do you plan to do with that $2 billion? What are you able to speak on in terms of what you want to do to go on the offensive for the company outside of that over the next 1, 2, 3 years?
Well, there's so much in your question. Probably much of your question is my answer, right? We're so pleased with the earnings report that we issued Monday after the market closed, because our performance in the second quarter was really encouraging. It's no secret that this pandemic was brutal on companies in lots of industries, including the movie theater industry, and you can see that recovery looks like it's coming, and we're not there yet. We lost money in the second quarter, and the Delta variant is flaring up, especially in the unvaccinated populations. But our performance in the second quarter was so much better than the first quarter, so much better than the quarter before that. Our performance in 21 so much better than in 20. You just have a sense that we're on the right path. We did make the comment that if the industry box office comes in at $5.2 billion domestically, then that should mean that we ought to be able to be cash positive at the theater cash flow level in Q4. That would certainly be another great step for us to hit. And we made lots of other news in the quarter, which I'm sure we'll talk about today. One bit of which is not small, and that's our liquidity. So you look back in 2020, there were times when we were going to run out of cash, and we raised between $5 and $6 billion between equity and debt and concessions from landlords and lenders and other entities close to the company. And that raising of the money is what got us through all this. And we ended the first quarter, the March quarter, with a little more than $1 billion of cash in the bank or undrawn revolver capacity. As it turns out, that $1 billion figure was the highest amount of quarter-ending liquidity that our company's ever had in its 101 years. And that record, that was $1.020 billion, it's between $1.020 billion and $1.025 billion in Q1. And that record of having the best quarter-ending liquidity the company's ever had, well, it lasted 90 days. Technically, it lasted 91 days. Because at the end of the June 30 quarter, we had over $2 billion of liquidity. between 2 billion 20 million and 2 billion 25 million. So we doubled our liquidity position between quarter one and quarter two. And boy, the breathing room that it gives AMC to get through the pandemic, it's enormous. It also gives us a lot of cash to do things with, as we said, to go on the offensive. And some of the things that we want to do by going on the offensive don't require capital, but they do require staying power. And the cash we have in the bank now gives us some staying power. And we announced several of those things on the call on earnings call on Monday afternoon, like accepting Bitcoin as payment online for going to movie theaters, going to explore in the investment stages alternative programming like sporting events and concert movies. And I know those ideas are popular with your subscribers because I read my inbound Twitter feeds, and the number of times I'm getting suggestions to do things exactly like that. It's just, I'm sure those are popular steps with our new shareholder base. Beyond that, though, there's also getting more theaters. And we did announce in mid-July that we were adding two very important former ArcLight and Pacific theaters in Los Angeles, the Grove and Americana at Brand. These two theaters were the second and fifth highest grossing theaters in Los Angeles just 3 years ago. And now they're going to be AMC theaters. And we think that our brand is very strong in Los Angeles and in Southern California. And that those theaters will do very well for us in the AMC network. Beyond that, though, we also said that in mid-July, we announced two theaters. Well, actually, as of Monday, we had 6 new theaters under either lease or signed letter of intent, and we're in advanced negotiations on 4 more. 8 of those 10 theaters are former ArcLight Pacific theaters, and ArcLight Pacific only had 18 theaters. So it's like buying half of ArcLight. That's an example. Without disclosing names, I can tell you that the CEO of at least 2 other major movie theater circuits have approached me about acquiring them. Whether we do that or not is a decision we have not made. We would only do that if we could bring them in at what I would think would be bargain prices. There's no reason given all the risk that's inherent in the movie theater business for us to go out and stretch and overpay for an acquisition. But if an acquisition came along at the right price, we'd certainly consider that. There are other ideas out there too. And whether we do any of these ideas, only time will tell.
Right.
The idea that's been suggested to me by some of your subscribers, some of my shareholders, that we should make exclusive content, as Netflix did with House of Cards and The Crown. We've done that before in AMC's history, and we did it successfully. Not everybody in your audience knows, but a few years ago, we had a joint venture that we owned 50% of something called Open Road Films, which made a movie called Spotlight, which won the Oscar a few years ago for Best Film of the Year. So we know something about that too. There's always the possibility that we could diversify our company and buy something else in leisure and entertainment related, but that isn't a pure movie theater play. Again, we'd have to be very careful in what we do. But we also talked on Monday afternoon that we think there's opportunity for AMC to get much more active in the world of cryptocurrency. And I'm sure you'll ask me about that later. So I'll
absolutely. You know, the cryptocurrency, Bitcoin, and all these different potential business opportunities for AMC. I've essentially compiled a list of questions that came from, the apes out there, the retail investors, that I think are pretty good ideas. And I just wanted to share with you, and get your opinion, because that's essentially what this opportunity is for. Before we get into that, I'd like to ask about Say Technologies, because it was a pretty interesting concept. It was able to essentially, you have a question that gets voted on, upvoted, and it shows you how many investors upvote a certain question, as well as how many shares are in that overall question. My two big questions for you, Titan, buddy. Sorry about my cat. My two big questions for you are, what was the inherent concept, the idea behind, essentially partnering with Say Technologies for that earnings call coming up? And then secondly, there's something that people are speculating on that I'd like you to be able to comment on if you can, regarding Robinhood buying Say Technologies the day after the earnings call, because it's speculation. There's obviously opinions about that. I'd say rightfully so, just based on timing. But obviously, coming from your mouth, it'd be the best opportunity to kind of get your opinion on both of those questions, if you could answer.
Sure. Well, look, I never heard of Say Technologies 60 or 75 days ago, but someone explained to us their capabilities, and that we would be able to take questions from individual shareholders on our earnings call. And that sounded like a great idea to us. We've certainly never done it before. I don't know of any other company. I guess maybe they have other customers, so maybe somebody's done it before. But I certainly haven't heard about companies taking questions from individual investors. But there's a difference between AMC and all these other companies. As I've said over and over again since about April, the individual investor now owns AMC. It's more than 80% of our shareholder base. 80% of our shares are owned by millions of individual investors. So of course we should take questions from individual investors, and Say Technology had this interesting feature, the upvoting of questions. So we could see how much interest there was in each question, and we actually asked we answered, I should say. My CFO asked on their behalf. Sean read me the questions, and we answered every single one of like the dozen most popular questions that were on the minds of our shareholders who participated in this thing. So that's why we did it. We did it because individual investors own AMC now, and in a public forum like that, we all thought it was a great idea to be able to talk directly to our individual investors and to hear from our individual investors. I'm going to come back to the second half of your question in a second, but it's really important for us to have a dialogue with the company's owners. That in addition to these questions that we took and answered on the earnings call on Monday, in late June, we announced AMC Investor Connect, where just under 300,000 people have enrolled already in a month and a half. That's incredible. It shows there's so much interest in AMC, and we're putting in all sorts of things, rewards and freebies and discounts and exclusive early screenings and lots of communications from the company and from me in AMC Investor Connect. I also started tweeting again, and I think on average, I'm kind of tweeting once a day, 5 days out of 7, 4, 6 days out of 7, depends on the week, depends on how newsworthy things are. But my tweets have been read over 70 million times since April. And I'm following about 2,000 people, most of whom are investors in AMC. You want to see my inbound Twitter feed. I'm getting literally thousands of messages a day, and it's become like a hobby of mine to read my Twitter feed each day. And I'm reading hundreds and hundreds and hundreds, if not thousands, of inbound tweets. Because, what a message is, at most, whatever, I think it's up to, when I started tweeting in 2011, it was 140 characters. I think they're up to 280 now. But a lot of these messages are very short. You can read a message in a second or two. You can read a lot of messages very quickly. But it really lets me have my finger on the pulse of what our shareholders are thinking, because they're telling me, and I'm reading. And nobody's like reading my inbound feeds for me and summarizing it for me. I'm reading it myself. No one's writing those tweets for me. I'm writing them myself. And so Twitter has become a very important way for me to get information out and to get information back from our shareholder base. So, because I said this on the earnings call on Monday, we have two goals in this. One is we really do believe that there should be two-way communication between company senior management and the company's ownership. And, I've been very public since April when I learned that retail investors were pouring into our ownership position and saying, look, I take all of your viewers very seriously. Like, this is big business. AMC is a company that had $5.5 billion of revenue in the year prior to the pandemic, and it's traded in the New York Stock Exchange, and you guys own it. And therefore, we believe that you should know what we're thinking. We should know what you're thinking. What we say probably will shape what some of you think. What you think will shape what we think and what we do. So goal number one is to have just really strong communication between the shareholder base and the company. Goal number two, I'm going to show all my cards. I'm going to declare my hand, as they say in poker. We have millions of shareholders. At the last count, it was 4.1 million shareholders. I want all 4.1 million to buy a ticket and go see a movie at an AMC theater on Saturday. Now, that's tough to do if you're in Canada, because we don't have any theaters in Canada. And it sounds like it's tough to do in Europe, except we're the largest movie theater chain in Europe. It's just not under the AMC brand. We own 100% of Odeon Cinema Group. So we're in the UK, we're in Ireland, we're in Finland, Sweden, Norway, Denmark, Germany, Italy, Spain, Portugal. We're in the Middle East under a variety of brand names. The best known is Odeon in the UK and Ireland, for example. It's Cinesa in Spain. It's UCI in Italy. There are a lot of the biggest movie theater chains in each of the Scandinavian countries are ours. So you can buy a ticket even in Europe if you want. But we'd really love to make sure that our company's owners, who now have a big economic stake in the company, and increasingly a big emotional stake in the company, because they, I'm reading over and over again, I love AMC, I love AMC. Well, so the company would do better if you see movies in theaters. And if you're going to see a movie in a theater, make it at an AMC theater, please. So we'd love to develop not only a financial ownership relationship with each of our shareholders, we'd love to develop a commercial relationship with each of our shareholders too. It's great when the lights dim and you see a dazzling image on a huge silver screen. Come on out to a theater. You'll have a good time when you come to AMC, and you can look around and you can say, I own this place, which will also make you feel good. And you'll also see that we're running our theaters really well. There's your cat. Is that cat an officer in the U.S. Army, by the way?
He sure is. His name's Titan. Siamese cats in Thai means diamond moon. And I named him Titan just by accident. I didn't know that's what it meant, but I just like Greek mythology, so that's that's what I gave him. He's crazy. It fits him.
Well, if your cat is an officer in the U.S. Army, I will thank your cat for his or her, which?
His. I didn't know until probably a week ago, but I'm 95% sure it's a boy.
Yeah, I'll thank him for his service to our country. And while I'm at it, I'll thank you for your service to our country, because you're, as I understand it, you're a second lieutenant in the U.S. Army as well.
Yeah. Thank you, Adam. It's no biggie.
but anyway,
I appreciate it.
Those are the two reasons why. No, but you said it's no biggie. It is a biggie. So I'm serious. Thank you for giving back to your nation. The but those are the two reasons that we're so into our efforts to interact with our shareholder base. We think communication should be good, and we'd love to see it as customers and guests at our movie theaters. Now, the second part of your question was, what do I think about Robinhood's announcement that they're buying Say Technologies? We obviously had no knowledge of that until it was announced. I guess was it Tuesday they announced it? And I must say we were quite shocked to learn of that. If you had asked me until the Robinhood announcement what I thought of the Say Technologies experiment that we tried on Monday, I would have said I thought it was great. I thought it was wonderful that we got questions from our shareholders, that there was a way to determine which questions had the most interest amongst our shareholders, and that we could answer them. But so that, as you know, so that we could verify that those were real shareholders asking the questions, there was some disclosure that you had to make as to who your brokerage firm was and how many shares you owned and the like. And honestly, I just don't think it's appropriate for us to ask our shareholders to tell Robinhood what brokerage firm they're doing business with and how many shares they own. So unless we can get some absolute ironclad assurance that there's some enormous wall between the information that Say Technologies gets and what Robinhood gets, I can't see us doing it again. Now, I can see us answering questions from our retail shareholders again, but I can't see us using the Say Technologies platform if there's any fear that it would be compromised because it's now, after Monday, connected to Robinhood, which Monday it wasn't connected to Robinhood, to our knowledge.
You've got a great pulse on the community, Adam. I think where a lot of people were concerned is Robinhood was tied up with a lot of the problems, financial problems and sort of, I would go as far as to say, corruption that took place between January and now. So it's good to know that you've been paying attention to that stuff and have the same sentiment that the majority do, because ultimately I think everybody's safety and their information is important. And I think the parties that, certain people are affiliated with is also important. So that's
before you move on, I want to be really clear. Number one, what you just said came from your mouth, not from mine.
Absolutely. I don't speak for Adam.
I don't want to make any comment at all about Robinhood as a company. I don't want to make any comment at all about corruption. It's not appropriate for me as the CEO of AMC to be talking about those things publicly. But I do think I have my finger on the pulse of what our shareholders think. And now you can move on to your next question.
Absolutely. I speak for me. I don't speak for Adam. That's my own personal opinion. But we'll go on to the next question regardless. I'd like to talk about the mandatory ownership in the company, because this is something that you spoke about during the earnings call that I found fascinating. You want to propose something to the board about executives owning a certain amount of years in salary. And I think it's a pretty cool concept to be incentivized by how your company does, right? It makes people want to work hard because it affects their lives. It's in their best economic interest. I suppose I'd like to iron out some details because there's some, I'd say, confusion that I've seen around on Twitter, on YouTube, my Discord, etc. regarding that. Is where do the shares come from? I'm assuming this is shares that they already owned or were issued in the past that must equal up to, for yourself, 8 years worth of salary income, or for the Vice, it'd be 6 years. Do you just want to speak on that a little bit?
Sure. Well, unfortunately, I have to give you a slightly longer answer, but when you look at the compensation of our senior executives for and even our junior officers, the top 75 people in the company, let's say, maybe it's even slightly more than that. Somewhere between a quarter and 3/5 of their annual compensation comes in the form of AMC stock. In my own case, 62.5% of my total compensation it comes from shares that vest over a 3-year period. And so already our people are working. You got a cat who does not want you to share your affection. That's all. You just put the cat on your lap and just pet the cat while we're talking. It's
all right,
fine.
that'll do. Good, good thinking. We'll see if it'll hold still. I got him. Go ahead.
Probably won't, but what the heck. So already our executive core is tied to the performance of the company and tied to the performance of the share price. And that's a very good thing. A lot of public companies have policies that require so-called insiders to own stock. And ever since I joined AMC back in 2016, we had a policy similarly. That policy had to be suspended in the middle of 2020 because the share price fell so low. It was actually impossible for us to own as much stock in the company as I would like people to own. Now the share price, as you know, has recovered from 2020 levels. And so it seems appropriate to put a policy back into place that requires executives not just to receive stock as part of their compensation, but hold stock and own it for a long time. And as you know, this policy has not yet been approved by the board of directors, and the board of directors will consider my recommendation at the next meeting. It is the first thing that I raised at the first board meeting after I was named chairman of the board by the board, that I think we ought to go back and require senior officers by policy to own stock and to hold stock for a while. My proposal is that I, as the CEO, hold 8 years of my salary in AMC stock, that the chief financial officer holds 6 years of his salary, that our executive vice presidents hold 4 years of their salary, that our senior vice presidents hold 2 years of their salary. Actually, the proposal that I'm making to the board requires the top 19 officers of the company to hold a minimum amount of stock permanently. That's more than double the number of officers who are required to hold stock under the old policy that was in place until the middle of 2020. And I just think it's a good thing. I think there's nothing that aligns shareholder and management interests better than requiring managers to own stock. When they own stock, they think like a shareholder. And they have every economic incentive to increase the share price over time.
Absolutely. Awesome. Well, that's a good answer. I'm very happy with that. And I think that's something that a lot of people forget too, is you guys have interest in how the stock price does. Maybe you're not able to speak on a day-to-day short-term basis, but the company does well and you guys do well. I mean, everybody likes to make money. So it's a good thing. I think the management incentive equity program is really huge. So I'm glad that that's something you guys are having discussions about. And I think that'll ease some minds.
But
I know it's different.
You did ask me where the shares came from, right? And I didn't answer that question. In prior years, shareholders voted that there be a certain number of shares that get put in the basket of the management equity incentive plan. And so those shares have been there for years and years. I mean, the first vote on that was 2013. I think there was another vote in 2017 or 18. It's not that many shares, actually. There's currently, I think there's about, you know that based on the numbers that we released in early June, it is our company's policy to release share counts in advance of every shareholder meeting, whenever they take place. So back in early June, we announced that for this July 29 board meeting, annual meeting of shareholders, we had 501 million shares, almost 502. And we issued another 11.5 million shares shortly thereafter. So that brings us up to 513 million shares that are currently outstanding. I think there's maybe 5 million shares that are sitting inside the management equity incentive plan that we could issue in 2022 and in future years. And that's the totality of what's there. And that's kind of it. I think we have 46,000 kind of regular shares left. And we have about in the neighborhood of 5 million shares sitting inside the management equity incentive plan. And that's it. That's all the shares that we have, which is one of the reasons that I did want our shareholders to arm us with more arrows to put in our quiver and approve some more shares so that, and we promised we wouldn't use any of them this year. And the last time we did it was 2013, I think, and it took us 8 years to use up that share authorization. But, I'm a CEO who wants a big war chest so that I can go deploy it to create value for our shareholders. And thanks to everything that's happened so far, we have a $2 billion war chest. Now, I'm greedy. I would write a $3 billion war chest or a $4 billion war chest. But that ship has sailed. You're aware that I was reading all those inbound messages from our shareholder base, and it was clear to me our shareholder base was split on this issue, and I didn't want to drive a wedge through our shareholder base. I like doing things that, you'll never get 4 million people to agree on anything, but I'd love to see strong, vast consensus emerge about strategy 1 or strategy 2, and I don't want to go pursue something that we might win 51-49. That's technically you win, but you're winning the battle and you're losing the war. Because I want our shareholder base to continue to have respect for AMC and affection for what we're doing as a company, and I don't want to drive a wedge through them. But so we're not going to chase for more shares this year. What we do in the future, I don't know. I guess it really depends as what opportunity is out there for us. It's a very powerful thing for a company to be able to use stock as currency to make some bargain basement acquisitions that can create enormous value for shareholders. But right now, the size of our war chest is $2 billion, and I'll just have to rein in my appetite to that league for now.
This is actually a question that I have in a specific regard to offerings and such. So as we know, there's a legally binding statement that Adam Aron's made along with his company that they will not ask for any more shares in 2021. They won't issue any more shares in 2021. But I think
wait. It's true that we aren't going to ask for any more authorizations. Technically, we could issue 46,000 shares.
46,000, right.
But I don't think 46,000 shares is going to change our fortunes all that much. What do you think?
Yeah, no, I think based on the daily volume, we'll be okay. I think, though, an interesting concept is this. I think where a lot of friction comes from with...
By the way, why don't we just make some news here? We won't issue these 46,000 shares this year either. How's that? Make it happy?
That sounds great. I like that. Anyway, where I was going with that is I think the concept that, a lot of the retail investors and the apes kind of split on is where these shares get sold to. So, for instance, you had obviously out of your control. You don't control what Mudrick Capital does. You raise money. Mudrick Capital purchased some shares. They sold them immediately after they dumped them. I think an interesting concept that I'd like your opinion on, and maybe you to speak on a little bit, is a rights offering, where maybe instead of offering shares to a third party, such as Mudrick, that you could sell them directly to retail investors who own 80% of your company. And frankly, I think have your best interest in mind in terms of the outlook of how AMC does 1 year, 5 year, 10 years down the road. Is that something that the board of directors or executives or yourself have ever considered doing when the time does come that you do approve more shares, that the shareholders approve more shares, and you do sell them into the market?
So yes, we have thought very hard about doing a rights offering. And just for those of your listeners who don't know what a rights offering is, that means that you go to your existing shareholder base and you offer them the right to do something. And in this case, your suggestion is we offer them the right to buy shares from the company at some price, market price, higher than market price, lower than market price, whatever. We thought very hard about it. You can't do a rights offering, though, if you don't have any shares that you can issue. And right now, I can only issue 46,000 shares. So that's kind of it.
The apes would eat it up.
So we go back to the first issue, right? Which is, you remember there was confusion way back when this started about the difference between authorizing shares and actually issuing shares. The share authorization was not that we were actually going to issue the shares.
Right.
It's that we would have the ability someday to issue the shares. And we weren't asking to issue shares at the moment. We were asking just give us the authorization so that down the road someday we could. And as you know, I went on your program and I even said, we're not going to issue any shares in 2021. But a rights offering is interesting. And look, hey, I read my Twitter feed. So if our shareholders who are watching your program think that's a good idea, let me know. If you think that's a bad idea, let me know. But the good news, I don't have to think about it for 5 months because I promised everybody we're not going to do anything in 2021. And I'm much more focused on restoring the company to health, getting us through this coming winter and the Delta variant and all that, getting us from cash negative to cash positive, restoring our EBITDA to historic levels. That's much more, and whether we can use the $2 billion war chest we have to grow the company smartly. That's where my focus is right now. It's not on issuing more shares.
Awesome. That's cash money. I'm very glad to hear that, Adam. And I just thought it was an interesting concept, an interesting question. I've seen pop up more than once. I'm sure you have too. So it was worth asking. I've got two more questions that I want to ask you, and then I'll leave you with the closing question that we always give here on a Trace Trades interview with you. The first one is regarding this partnership with GameStop, that you guys have been talking about. Nothing set in stone, obviously, just something that you guys have considered looking into. I'm curious as to what that partnership looks like in Adam Aron's mind, in AMC's mind. What sort of goal would you have in mind if you were to pursue and accomplish a partnership with GameStop?
Well, you're ahead of the pack a little bit. So I told you I read my inbound messages, and I see a lot of them that says, you guys should partner with GameStop. And of the top 15 questions, I think, 2 of them were, well, what about doing a thing with GameStop? And I said I was going to answer shareholder questions. I was going to answer them honestly. The question was, would you consider it? I said, sure. And we've given some thought to what we might be able to do. And there are some intriguing possibilities, actually. But I also said on Monday afternoon, we've had no conversations yet with GameStop. And I think out of respect for that company, which itself is a big, proud American institution, I think we owe it to them to have a conversation with them in private before we start discussing publicly what could we do and what are the possibilities.
Absolutely.
So I'm going to nicely say it's on our radar. No conversations have taken place yet. I've said that we will reach out to them and we'll see where that goes. And as we know more, we'll share it with you and your audience.
Rock on. Hey, well, I've got one more question for you, and then we'll leave you with the usual closing statement. But before I ask that, there's something I just want to give to the viewers right now, just as a respect in terms of a question that I know they want me to ask, and that's regarding the share recall. I'm not going to ask you this. What I want to say is legalities and legally binding statements that Adam Aron makes affect him in a way that is different from what the average person can speak about. So this is not a question that I'm going to be able to ask Adam out of respect. I hope that you guys understand that, but I do owe you guys that at the very least, to know that I paid attention to that question. It's just not something that he'll be able to answer. So it's just not something that we'll be able to talk about here today. But I've got a question for you, and this is actually something from me. Everything that I've asked you here today came from what I pay attention to on Twitter, YouTube, whatever it may be, all the people who love your company, who like the stock, right? But this is something I want to know is your shares. You have owned a couple million shares of AMC since 2015 when you joined the team over at AMC. You haven't sold a single share, and your net worth increased by $220 million up to June when it hit $77. Your net worth was up almost $250 million. You didn't sell a single share. Now, this is an interesting thing for me because that's a lot of money, So just psychologically speaking, I want to know in Adam Aron's mind why you didn't sell any shares. Why is it because you thought the stock price would go higher down a couple of years down the road? Is it just a moral, ethical thing? I just want to know what was the reasoning behind why you didn't lock in profits? Why you decided to diamond hands out the stock like the apes have been?
Hey, look, I'm chief executive officer of the company. I've run this company for 5.5 years. I'm going to run it for a lot more years. I ran a company called Bell Resorts in Colorado for 10 years. I didn't sell a single share until my 10th year. I didn't sell a single share for 9 years. I believe that chief executive officers ought to own a lot of stock in their company. Yes, the stock went way up, and we've given some of that gain back, but we started the year at $1.91 a share on January 5, and it was over $30 today. Last I checked, 30 is a lot more than $1.91. I don't like selling stock in companies that I run. I believe in the future of AMC. Having said that, and so, by the way, I could have sold stock in March. I didn't. I did give some shares to my adult sons. They're 30 years old, and it's time. But I didn't sell a share in March when I could have. I didn't sell a share in June when the stock was in the 70s, when I legally could have. The stock, I'm allowed to sell shares right now, all the way through September 30. And I said publicly on Monday, I'm not going to sell a single share now. But I also said on Monday on the call, much to my horror, in September, I'm going to turn 67 years old.
Not a day past 50.
Yeah, that's what I think. And actually 34. As far as you asked me in my head, how old am I? I'm 34, and I'm a very energetic fella.
Tracking.
So I got more energy at 66 and 10 and a half months than a lot of people who are on this YouTube show right now. But at some point, I'm going to have to take some of my shares and diversify my assets. More than 85% of my net worth is in AMC stock, and or was in June. And at some point, I'm going to have to sell some. And I also did something on Monday that's also sort of unprecedented. The law is that if a senior executive sells stock, they're allowed to do it just like they sell the stock. It's better if they use what's called a 10b5-1 plan, which sounds very obscure. It's Section 10b5-1 of some U.S. securities law that essentially takes all the trading decisions out of your hand. You set up some general parameters of how the shares could trade, but then you turn it over to an independent bank and you're out of it. And they make all the trading decisions after that. You just find out after the fact what they do. So if and when I sell shares, I'm not going to sell them just in the market the way people are legally allowed to do, where I'm legally allowed to do. I'm going to do it under the auspices of a 10b5-1 plan. And under current practice, you don't have to disclose that until you actually sell the shares. And I disclosed on Monday that, I don't know, 4 months from now, 5 months from now, 6 months from now, whatever it turns out to be, 3 months from now, maybe, I don't know, that I'm going to put some shares in a 10b5-1 plan. But at the same time that I said that, I am asking my board of directors to legally and formally require that I hold 8 years of my salary in either owned shares or previously granted shares or part of my compensation from prior years, 2016, 17, 18, 19. But hey, that's what I'm asking the board to require the chief executive to do. The reality is that at today's market price, my stock is like 100 years of my salary. And I haven't yet exactly decided what I'm going to do this winter, but I assure you, if you count my granted shares from prior years that will vest over the next 36 months, I'll be so far above that 8-year thing. I'm going to be a big AMC shareholder. Well, right now I am a very big AMC shareholder. I'm going to stay a very big AMC shareholder. All I'm doing is betting on myself and betting on the team that I've helped to build and that I helped to lead. And I'm quite optimistic about our long-term future.
Heck yeah, that's some silverback shareholder energy. I like that. That gives a lot of honestly confidence to me and to a lot of other people. I don't think it's something you can truly understate. So hats off to you. It's really respectable. My closing, question for you, as the last two interviews have been, is regarding, these short sellers and mainstream media and some specific names. And this is coming from me. This is my opinion, right? Not Adam Aron's. I don't speak for him. But you got guys like Jim Cramer and Rich Greenfield who very frequently speak against your company and bet against you and bet against AMC and bet against retail investors. So as always, Adam, I want to close this off by getting if you could say anything to these guys, the naysayers over the last 7-8 months, 1-2 years that have bet against your company, whether it be short selling or mainstream media, what could you tell them? What would you want to tell them?
Well, let me hit the premise of your question for a second. I know that, look, I don't have a lot of affection for Rich Greenfield's 1 cent price target on AMC. I'm not making any comment about Rich Greenfield per se.
Right.
I just don't happen to agree with his 1 penny price target for our company. I think Jim Cramer has taken a pretty unfair rap. I know that I read my feeds, so I see what people say. Look, I know about his whole career, and I understand why some of your viewers, anybody who's ever worked for a hedge fund, they don't like. But I know that Jim had doubts about AMC initially, but if you look at what he's been saying the last 4 or 5 months, he's been saying very good things about AMC. And so I don't think you should necessarily lump all these people into the same boat. Look, when I go on CNBC and they ask me a hard question, like that's what journalists do. They ask hard questions. They give me a forum to state the rebuttal, so to speak. And on balance, I believe that Jim Cramer is rooting for AMC and rooting for Adam Aron. So, and I'm going to take a lot of grief on my inbound feeds because not all the people who are watching this agree with that. But he said some very nice things about AMC, and he said some very nice things about me, and I appreciate that. But if you broaden the question from just those two names that you mentioned,
right? It's a generalization. That's just names that popped in my head.
Yeah, I understand. Look, hey, it's a free country. People are allowed to bet with you and bet against you. Don't particularly like it when they bet against you. I'd much rather they bet with us. But I know that your audience may be focused on short sellers. I don't want to say this to say that I'm oblivious to what goes on with our share price, because obviously, given that I own millions of shares and I'm a very large shareholder, I care very much about our share price. But my focus is so much more on guiding this company through the most difficult 2-year period that it's probably seen since World War II. Certainly the most difficult 2-year period of my lifetime. And I've got to tell you, speaking of that 67-year-old who is, can't hide the fact that time is marching on, and this ain't my first rodeo, right?
Absolutely.
AMC is the 5th company that I've run since 1993. And I've had a very successful career. Before I worked for several companies before becoming a CEO. And I'd like to think that I did a really good job at each of my stops along the road. And some of those stops were short, like a year, and some of those stops were very long, like a decade. There are things that I'm associated with that in my past that I'm very proud of. Your guys may not know this, but in 1982, I'm one of 9 Americans with a straight face who can say they created and launched airline frequent flyer programs, which revolutionized how marketing is done the world over. Loyalty programs did not exist in 1980. And it was the airline industry that pioneered it. And I was there were 9 major airlines in the United States at the time, and each airline had one person. And I was 27 years old, and I did it. And then I launched one of the first hotel industry frequent guest programs when I was the chief marketing officer of Hyatt. And that was 1987, a long time ago. So there are things that I have been associated with that I'm very proud of. Norwegian Cruise Line, which was my first CEO ship, was a company that was in so much trouble, and so many people were predicting it was going to go bankrupt. And we pulled off an incredible turnaround at Norwegian Cruise Line. And, fast forward 25 years, it's still one of the most potent and successful cruise companies around. Now, the cruise industry is on its tail because of COVID, but that's there will be a world after COVID. I'm sure Norwegian will come back. So a lot of things I've done that I'm proud of. But in my entire career, over everything I've seen, I've never been more proud of what I've had the privilege to lead and accomplish at AMC in the past 16 months. And I'm so proud of our executive team who worked under grinding pressure. Our revenues went from $450 million a month to $450,000 a month in a week. Companies weren't designed to go from $450 million of revenue to $450,000 of revenue overnight. And that we got through the pandemic is a great feat. And now we've marched into a new era where we need to continue the recovery of AMC. So we build back to profitability. And we're at the forefront now of what a friend of mine, who's a very prominent financier, called the democratization of Wall Street and the rise of the individual investor. And I'm as proud as I am of the first act of our post-COVID experience, which was saving the company from catastrophe. I'm really proud that we're out in the forefront of the democratization of Wall Street. So many articles have been written about, Adam Aron's embraced the retail investor. It's like it's a news and a novel thing. And can you imagine that? There's a CEO who's actually paying attention to individual investors. Well, of course, company executives should pay attention to individual investors when they own the company. Company managements have always devoted a lot of time to interacting with their shareholders. And so I'm very proud of the fact that Adam Aron and AMC is out in the very forefront of giving individual investors the respect that they properly deserve. And I'm certain of only one thing. I think together, investors and management, I think AMC is in good hands. I think we have a bright future. And, unless I keel over dead tomorrow, which I don't intend to do because I'm in really good health, I think, I know I'm going to be running this company a year from now. And I'm sure I'm going to be running this company 3 years from now. And I hope I'm going to be running this company 5 years from now. And who knows, maybe I'll be running this company 8 years from now on my 75th birthday. You can never tell. But when people look back on all this, I'm not talking about how we're going to do, in the second quarter of 21 or the third quarter of 21, but looking ahead. I think this alliance that's been built between the owners of the company and the management of the company, I think AMC is in good hands, and I think we got a bright long-term future.
Man, I don't think there's anything I can say that's gonna cap off this conversation better than that. Adam, always a freaking pleasure to be able to speak with you. I really mean it. You're a genuine guy, and I think really you can't put value on how cool it is to have somebody that interacts with their shareholders in a unique scenario like this, where 80% of the company, as of the last year count, is owned by a retail investor. So I appreciate your time. We kept you longer than I intended to. I apologize for doing that, but it's been a blast. Thank you for coming on and answering some questions for the apes.
Well, thank you very much, and all my shareholders out there, why not go see a movie this weekend? There just might be an AMC theater near you. We'd love to see you.
Hey, I'll be making sure to go out and buy $100 of Milk Duds, Coke, and popcorn, as I always do when I go watch a movie. Hey, absolutely honored. Appreciate having you on. Gorilla Gang, hope you guys enjoyed this live stream and this third interview with Adam Aron. You guys have a good night. That's what I got for you. So lights, apps, always. Much love and peace.